Good morning, everyone. Shreyan's here. We have Julia, John, Kelly, and Seth with us. We'll be talking about Keystone Pipeline from U.S. perspective. What is Keystone Pipeline XL? Pipeline extension designed to transport crude oil from Alberta, Canada to refineries on the Gulf Coast of Texas. It was purposed in 2008 and ultimately the project was denied in 2021 by President Joe Biden. Since it was proposed, there has been a number of controversies and opposing views on the pipeline. This presentation will discuss the negative economic implications and effect that the pipelines would have on United States economy.
We will be relating all of the topics in our macroeconomic textbook to the Keystone Pipeline. We will then be following by with two recommendations from the consumer side and two recommendations from the business side. Then moving on to conclusion and opening the floor up to any questions. The Keystone XL debate has been discussed around the environmental and economic risks. Alberta is geographically situated on tar sand crude oil deposits, which are not normal crude deposits. These are sludgy and dirty deposits, and a study released by Cornell University found that between 2007 and 2010, pipelines moving tar sands oils in the Midwestern states spilled 3 times more per mile than the US carrying national crude or regular crude. These also have serious environmental costs in the extraction and refining process, as well as expensive and time consuming economic costs. Researchers state that digging up tar sands will raise the Earth's temperature by 2.5% and could also cut the US GDP by 2.5%. An increase in temperature translates to more severe natural disasters and health concerns for individuals. The United States has been desperate for long-term employment positions and stability for their economy. From a worker's standpoint, the Keystone XL reduces unemployment and puts people back to work in high-paying union jobs. With construction unemployment double the national average, this seems like a no-brainer, but it is not. According to the official estimates, constructing the pipeline will generate fewer construction jobs than that. A report issued under the Obama administration found that there would be 3,900 direct construction jobs if it was built over 1 year, or 1,950 if the work was spread over 2 years. With 40% of the oil industry consisting of gas station workers, this has been cutting and not creating jobs for the US citizens and flooding the economy with low paid minimum wage positions. Has also been cutting the US GDP by 2.5% and is a far better alternative to build sustainable, eco-friendly economy in the long run. Alternative energy sources such as solar are already outperforming in this industry, spanning from marketing, sales, manufacturing, and software development positions. Research by the Solar Foundation already shows a 13% growth in the last 5 years with over 119,000 new positions.
Unemployment and inflations. The percentage of individuals who are 15 years of age or older are not gainfully employed, but who are actively seeking for employment. From 2008 to 2011, unemployment was high and rising. From 2012 to 2021, unemployment dropped to 4% or lower rate of national employment rate. The pipeline would create 1,915 construction jobs and 35 full-time permanent jobs. From my perspective, I think this falls under frictional unemployment since the jobs are not stable except for that 35 permanent jobs. Economy further away from closing the inflationary gap with full employment at above the full employment. Inflation output costs consequences resulting from the loss of output due to inflations, lower levels of investment, lower levels of net export. From 2008 to 2021, inflation has been rising all the way to the highest level. Import import push inflations. Imported price of oil can influence prices of all the other consumer goods. Next up, we got aggregate supply and demand. The magnitude of the impact depends on price sensitive Canadian oil supply and demands are. Microeconomics equilibrium exists when the aggregate demand equals to aggregate supplies. The purpose of pipeline would increase the supply and demand, which will remain constant or constant. Inflationary gap, the economy is producing an output above full employment. There is a gap between real GDP and potential GDP. Increased supply would not decrease the price of oil for consumers. Since US could export oil to different countries like Mexico, Canada, China, India, or South Korea.
Autonomous spending and the multiplier. The creation of the pipeline will create a lot of jobs and put more money into the people's pockets. At the time the pipeline was introduced, the US was in an inflationary period. Adding more money to the economy would only add to the inflation. And employees would have more disposable income and, and would have more induced spending. The money would be added to the economy through funding of the pipeline, and it would cycle through the economy multiple times, creating more inflation for the US economy.
So, fiscal policy is the utilization of government spending and taxation policies to impact financial economy. The US economy in the years before the pipeline was rejected was in an inflationary period with low unemployment that fluctuated around 4%, except during the COVID shutdown months. But those jobs returned and the unemployment rate leveled out. During an inflationary period, what kind of government action is required in relation to fiscal policy? Countercyclical fiscal policy, which is the deliberate adjustments in the levels of government spending and taxation in order to close the inflationary gap. This would mean a decrease in government spending to lower the level of aggregate demand and an increase in taxation, which would also lower aggregate demand and help generate income from taxes and thus reducing budget deficits. The proposed pipeline would only have created 1,950 jobs over 2 years, and once the pipeline opened, it would only require 35 full time permanent jobs to run and 15 full time temporary jobs. This increase in jobs would be marginal in respect to the amount of extra income the government would generate from taxes.
Banks generally do not hold onto large amounts of cash. What this means is someone who gets a loan is going to send loan. The seller is not going to want to keep the excess cash on them, so they're going to deposit the cash in a bank. The bank will then have excess reserves, meaning amount of money kept in vaults, so that they would be able to lend out most of it. At the end of the day, the banking system is going to have an increased loans and deposits by a multiple of excess cash reserves that initially had. So what does this mean regarding the pipeline? The pipeline is an imported product. That would mean that there is going to be an outflow of American cash. With this, there is going to be less money deposits coming into the bank. And with that, there's going to be a limited ability for the banks to replenish themselves, resulting in a weaker reserve position. So, in conclusion, the United States is most likely going to be taking money from the economy, such as borrowing money from other banks to replenish the money.
The monetary policy refers to the way in which the Federal Reserve manages the money supply and interest rates to help maintain a stable economy. This management helps control inflation, stimulate growth, and attempts to reach full employment within the economy. In 2008, when the pipeline was proposed, the US economy was in a recession. Therefore, the federal bank increased the monetary supply and decreased interest rates as a means of stimulating the economy. The time between when all the permits and funding could be attained would be years, at which point the economy was no longer in a recession, but now in an expansionary period. So from 2009 to 2018, unemployment rates fell, interest rates were at all time lows. So, how would the approval of Keystone Pipeline XL impact the economy under monetary power policy? The answer is negatively. Approval goes against the policies the federal bank is implementing to stabilize the economy. In order to help achieve full employment, contractionary policy is needed, meaning a decrease in the monetary supply and an increase in interest rates.
The main purpose of the Keystone pipeline is to deliver Canadian and US crude oils to the North American markets. Uh, Canada supplies 62% of the Canada supplies 62% of the United States crude oil. The pipeline will make it easier to transport the crude oil to the US. If the US did build the pipeline, then it will cut out a lot of trading with other countries because it will be heavily invested in the project. Other countries the US imports crude oils from are Mexico, Russia, Saudi Arabia, and Colombia. It would need to put a lump sum of money into the pipeline's construction with only one country, and that would leave out a lot of trading with the other five. The money could be used to buy oil from other countries if they have like a price reduction or a discounted rate. The US would not be able to capitalize on the opportunity due to the heavy financial investment of the construction of the pipeline.
So if you look at there, the exchange rate between the United States and Canada is $1.33. And if you look at the three numbers in the brackets, that's data from 2019 to 2021 showing the balance of payment being in the deficit in the United States. This is a disadvantage for the United States regarding the pipeline because for every $1 US spent in Canada, Americans get $1.33. So they're going to get more for the dollar. When Canadians buy American, they're going to get 77 cents for every dollar that they send. And kind of going deeper into this, more imports from Canada means that the balance of trade suffers. This causes the power of the US dollar currency to weaken. And with Americans having the stronger currency, it would mean that their dollar will go further in buying foreign investments because in the exchange rate between the United States and Canada, their dollar is worth more. Currently, with the exchange rate, it is beneficial for the Americans to import the crude oil because the dollar goes further. But if the exchange rate were to decrease and depreciate with the Canadian dollar, it's going to cost more to import the same crude oil, which potentially could lead an increase for oil prices for Americans. And going even deeper, the balance of payment in deficit would mean in real terms that there's been more imports than exports occurring because the value of money uh, will have to adjust to help itself. So this would mean that the states must take from other nations to pay for their imports. Because there's been more imports, the value of the US dollar is weakened. The quantity of US imported goods does not change and still needs to be purchased. Therefore, the US needs to find a way to still purchase the same level of goods with a weaker dollar. This means that they will either have to either incur debt to cover the difference or print money to cover the differences, which will cause a rise in inflation and thus reducing the value of US dollar even further. So, based on the presentation, there are two recommendations from a consumer perspective that the team established. The first is not to approve the pipeline because it's not going to improve the current inflation or prices for consumers. The second is that it is recommended that monetary and fiscal policies are changed to help lower prices for consumers. Three reasons with our presentation that demonstrates these recommendations as follows is that the first one is that the increase in production is not going to change the price of gas for consumers. The second is that the continual increase in inflation will mean higher prices. And third, the research also showed that with everything, the pipeline is only going to create 35 jobs.
The approval of the pipeline would negatively affect businesses due to long-standing relationships that are required in with Canada. If the pipeline were to be built, we would be unable to potentially import crude oils from other countries where it would be more financially advantageous for us to do so. Due to the inflationary period the economy is in, the inflation and rates rising, it would mean that the money that the businesses borrow will have to be paid back at much larger amounts when the project is complete. It is recommended to wait for the economy to be in a recession where the investment would help the economy.
So looking at the proposed pipeline through the various macroeconomic lenses, it is clear to see that the US is in an inflationary period. The approval of the pipeline would only harm the US economy. If the US economy were in a different economic position, the pipeline may be beneficial. However, in its current state, this is not the case. Approval for the pipeline would negatively affect GDP, continue to increase inflation, and move the economy further away from closing the inflationary gap. We'd like to thank everyone for listening, and if there's any questions,